Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at: the NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week I launch a weekly brief, and of course once a month we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today. How to track progress without focusing on the dollar amount. Oof, man, that's a tough one. Begin with, first off, a simple spreadsheet. Keep it simple, right? Because if you don't keep it simple, you're just not going to do it, right? I mean, let's be realistic here. It's got to be something that we're going to keep doing so we can keep tracking it. So make sure that it's simple. It's got to hold a few things. It doesn't have to have a ton of stuff. The date and time would be a good thing, obviously, if you went long or short, just basic stuff. The pattern or the reason for the trade, the risk reward, and something that not a lot of people will put in there, but the assumed probability, what you thought the probability of the trade was going to be, and then what the result of the trade was. And when you're writing down the results, try to focus more on a -1R, right? That's the risk on the trade. Or if you make a winning trade, it would be a +2R. You're making 2 times the risk, or that kind of mentality. Because that way you're not focusing on the dollar value so much as just a winning trade or a losing trade. If it was a losing trade, I know that it's a -1R. If it's a winning trade, it's a +1R, +2R, or whatever it happens to be. Now, of course, obviously, that it makes it a little bit easier if you're assuming that every trade has the same value to 1R. So if 1R in your instance, every trade that you take is always risking 1% account value, then that's 1R. It makes it a little bit easier if everything is equal. Obviously, when the real trading environment hits, it's hard to make sure that everything is exact in the heat of the moment, but that's the idea, is that 1R would be the equivalent of a relatively typical size loss in terms of your account value. There are also some other considerations that could help potentially while you're trading, and one of the first obvious ones is when you're in a trade, turn off the dollar value, right? Don't show the P&L in positive or minus dollars. When you're showing it in positive or minus dollars, that's something that all of us can kind of mentally equate to. If I'm down $1,000, I know what $1,000 value is to me, right? I understand what that means when I'm down $1,000. But if I look at it and it says I'm down 15 ticks, that's a different story, because I'm not necessarily associated so much with a dollar value as much as it is a tick value. It's a same thing, but you're just skewing it to something that you're not necessarily used to. Something else to consider would be hiding your trade results from yourself. Now, make sure that you have a safety net in place with your broker if you're going to do something like that to prevent any accidents. You know, max loss per day, etc., something like that set with your broker. And again, keep in mind, you don't want to show the P&L, right? No P&L. You can still have a window that has all of your open orders and all of your open positions and pending orders and all of that. Just none of the P&L, none of the dollars and cents stuff. And then measuring all of the trades in ticks. Now, obviously, we have to know our risk value in ticks, But once we know that risk value, the dollar amount that equates to doesn't really matter anymore. We can disassociate from that because we know our 1R measurement fits XYZ, right? That's how many contracts I have to trade for this amount of ticks. We know that ahead of time. So because of that, we don't have to approach it with a dollar value anymore. I know that if my trade is wrong, I am down 1R, give or take a couple ticks for slippage maybe. So realistically, everything kind of comes into play automatically because everything is all set out and locked in as far as the trade goes. So you can think about it as ticks instead of, oh, I'm getting into this trade and oh no, now I'm risking $200. When you think about it that way, you're going to start edging into it a little bit more emotionally, and you're going to trade it differently whether you want to or not. One thing that always kind of comes up is, well, the most obvious thing is setting daily goals, right? I want to make $100 a day, or I want to make, XYZ every week, or whatever it happens to be. That's cool. But the problem is, it's one of those things that works awesome in theory, but you're going to have one of those days where you wind up at $95 and you're not at your goal yet. But if you risk anything, you could potentially give most of it back. So it's this weird balance that you're going to find yourself in psychologically, again, whether you want to or not. So utilizing goals in concept works perfectly because that's exactly what you would think would put you in alignment with what you need to do. But it causes a lot of other problems that don't come up until they come up. And then you realize, wait a minute, this maybe isn't the best idea in the world. It's making it harder just in a different way. So, I'm not a huge fan of using like an average ticks per day or average dollar value per week or something like that, because it's going to cause other problems in other areas, and that's going to cause other psychological issues while trading. And there's enough of those as it stands to to stack a bunch of other things on top of it. So, realistically, to break it down, some of the best ways to catalog what you're doing as far as a trader that's starting out or is just looking for a way to kind of disassociate from that dollar value, keeping a very basic spreadsheet, super simple because otherwise we're not going to do it, right? Date and time, long and short, pattern or reason, the risk and the reward, in the assumed probability. See how good you are at judging your probabilities. You'll find that your probability, when you first start doing it, might be a little bit skewed, and you'll start to realize where probability comes into play. It's an interesting little mind game. And then also the result of the trade at the end of it. Did you lose 1R? Did you gain 3R, 2R? How did it go? And then, some of the other things we talked about as well, like turning off the dollar display or hiding some of the things from you so they don't mess with you. Just make sure you have safety measures in place. But those are a few things to consider when you're looking at trying to disassociate from the dollar value so much and just focus on the trade and trading as a whole. So that's going to do it for this one. I hope you found it useful, interesting, entertaining, something that you can maybe add to your tool belt in case you need it. Maybe your risk reward or your trading approach needs a little bit of polish on the top there. Some spreadsheeting can do some wonders. You'd be amazed. But that's going to do it as per the usual. If you have any questions, feel free to shoot me an email, jhb@ssftg.com. Till the next one, like we always say, stay safe out there. Keep those stops in play. Let the winners run. Until the next time, have a good one. We'll talk to y'all then. Thanks.